thanks very much, David, and thanks very much for having me at the summit, and congratulations on putting a segment on the visitor economy on the program. There's no doubt it's a really important part of the Australian economy, and I think something that will become an even more significant part of the economy going forward. And of course, a lot of that growth is driven by what's going on right here. And thanks, Sam, for that nice little segue you provided to that question just earlier. Look, I wanted to provide, I guess, a bit of a, not just a shopping list of potential investment opportunities for you folk in the room, but a bit of an overview of some of the drivers that are going on behind tourism, some of the macroeconomic issues at play here, some of the overall numbers around the shape of international tourism in particular, and then a particular spotlight on China and what's going on from China and how a significant component of that is of the tourism mix that we're seeing. And then, because I'm a political lobbyist, I want to have a bit of a public policy discussion with you about some of the things that the industry is taking to governments to seek to try and drive change and supercharge this growth that we've got going on at the moment. As David said, TTF, just a couple of words about us. We're at the peak national group for the tourism, aviation and transport sectors, CEO Forum, top 200, so we don't attempt to have within our membership all the very many small players within the tourism sector. You know, a lot of those brands you'll be very familiar with. Our primary purpose is to lobby governments to provide a better public policy outcome for our sectors. And you can see the membership spans across aviation, accommodation, attractions, the marketing bodies, retail, hospitality, many of the transport sectors, public and private, consultants, and obviously investment houses like Host Plus. So through my presentation today, I'll talk about the visitor economy, and sometimes I'll use the visitor economy and tourism a little bit interchangeably. But really, the visitor economy is the right definition. It's because what we're really talking about is the total impact of travel and tourism to Australia, the different industries that help to earn or that earn a buck out of people visiting Australia or visiting within Australia. And that reflects the very different drivers of why people travel. So people travel for leisure, for a holiday, but also to visit friends and family, for major events increasingly. So whether that be sporting events or cultural events or festivals, or to participate in a sporting event, we're seeing much more of that. Business events, conventions, exhibitions, meetings like this one. Education is a big driver of travel, and because of the length of stay that people have when they're studying, it's a great kicker into the economy. Working holiday makers and increasingly nature-based tourism is also a significant component. So it's a broad definition and reflects a broad range of businesses that are in this space. In fact, when you look at that range of logos I had on the earlier slide, you can see that they're all very different businesses. The only thing that actually holds them together is they take a dollar out of the same wallet as it passes through the economy. So I just want to start with a bit of a helicopter view now at a macro setting. Now, how much of a big deal is the visitor economy to Australia, and how much of a big deal is it likely to be into the future? I'm going to rely for the next few slides on some work that Deloitte Access Economics released last year called Positioning for Prosperity, Catching the Next Wave. So I thank them for the use of these slides. And the purpose of their work was to ask the question. So the mining investment boom is stepping down as a contributor to the Australian economy. What are likely to be the parts of the Australian economy which will be the bigger sources of growth into the future? So the first step in their thinking was we're looking at the global economy and understanding what are going to be the elements of the global economy which are going to outperform global GDP. So they ran them through an assessment of the key factors, global growth, generally urbanisation, demographic changes, rise of middle class, environmental issues, and end up with a ranking, which might be a little bit difficult to see there, but you can see if you then band it, that middle line there is global GDP, which is estimated to be at 3.4%, and then the two lines either side of that are plus or minus 10%. So they looked at what are the sectors which have the potential to outperform global GDP by more than 10%. You can see that grouping up there, with tourism being one of those. That's one side of the story. It tells us what the world wants, but the world doesn't have to buy those things from Australia, of course. It can buy them from anyone, from any country in the world. So what are we comparatively good at? So Deloitte developed an Australian Advantage score, where again they assessed different Australian sectors around a range of factors, created this score, and then provided this sort of ranking. And just to run through it, in case it's a bit difficult to see there in the audience, got agriculture out the front, mining, gas, tourism, oil, international education, and then wealth management on that list. So, you know, these are the areas, or these are the sectors which are more likely to be sources of growth for the future. And if Australian is looking at which can potentially be the turbochargers for growth, then it's more likely to come from these sectors. So you need to put the two together, you know, what the world wants with what we're good at, and you get a prosperity map that Deloitte Access Economics created. So the closer to the top right there is that mixture of what we have a comparative advantage in and what the world is more likely to want. So the top five there: gas, agribusiness, international education, wealth management, and tourism. And in fact, the size of the bubbles represents the current size of those sectors within the Australian economy. So tourism of those five sectors is actually the largest. And the estimation that Deloitte Access Economics, their forecast was, with the right policy settings, that those five sectors could have the same economic impact as mining currently does in the Australian economy. So it's all to say that there's a lot of potential there for tourism, for the visitor economy to grow, and it's because we're good at it, we have what the world wants, and the world is increasingly demanding tourism services. So let's go and have a look at how big the visitor economy is at the moment, starting with consumption. So we generate $110 billion in consumption. In terms of GDP, direct contribution to GDP of $42 billion, indirect of $48 billion, so around $90 billion in total. Just to give you a flavour for what that means in comparative to other sectors. So it's about a third of the size of the finance sector, about half the size of the health sector, 50% bigger than agricultural, forestry, fishing, nearly 3 times bigger than construction. So it's significant. It's significant without being in the top handful of sectors on a GDP ratio. In terms of taxes, there's a decent amount of tax take here from government. 3.5 billion of direct tourism taxes, and a further 7 billion, just over 7 billion of indirect taxes. So again, a significant contribution to what governments are raising through their tax take. But the big impact in particular is jobs. Tourism is a very jobs-rich sector and provides employment right across the spectrum and right across indeed Australia. So direct employment in tourism is over 500,000, 543,000 people have a direct job in the tourism sector. So that's a lot of people. Indirect is another 350 odd thousand. So you've got more than 900,000 people have earning their wage out of the visitor economy. So that's very significant. And again, to go back and look at some of the comparisons there, well, it's about 2/3 the size of manufacturing, which is right up the top, just behind retail trade, twice the size of finance and insurance, and 3 times the size of mining. So we're talking about an employment impact, which is very significant, and a contribution to GDP impact, which is also quite significant. So just go to a global benchmark now and get a feel for the size of the Australian visitor economy within a global context. Well, Australia ranks number 43 in the world for inbound visitor volume. Okay, so that's probably what you'd expect given the size of Australian population, but the expenditure levels are much bigger. So the number 11 in the world on expenditure by visitors. So they're high yield, and you see that with that last number there. The average daily visitor expend, and this is taking out the airfare component, is number 1 in the world. So what we're getting in Australia with international visitors is people who are prepared to spend money. Obviously, the long haul nature of the destination drive that. We're not like Europe or North America or Asia where you can just hop across the border on a bus. You need to jump on a plane. So you need to be prepared to invest the time and the money to a trip to Australia. But that has significant impacts for the businesses that are looking to make their living out of this sector, and we'll come back to that. Again, just give you a bit of a feel for the makeup of visitor expenditure. So the bottom there is domestic overnight expenditure. You can see how much of a mainstay that is for the tourism industry. It's the bulk of the spend, and you can see that it's a steady growth story there. The next, the light blue band, is domestic day trips, significant, and the red band on the top is international overnight expenditure. So you can see that there's good growth there. In fact, it's more than doubled since 2000. So that's a nice story. And as I was just saying, that is almost all of that is a high yield. So purpose of visit. You can see holiday in the red there is the mainstay of purpose of visit. Visiting friends and relatives is the next largest, and then business, and then you go down to education, employment, and a grab bag of others. One of the things that TTF does is look at sentiment, and this is a chart showing the industry sentiment for domestic tourism. It's both looking at what we do is, and we do this with MasterCard, is that we ask our CEO members their perspectives on their business's performance this quarter and what they think will happen next quarter. So this is a domestic story, and it goes back to just after 2000. So you can see we've had a good, steady trend of positive performance and positive sentiment, and leaving us with the best place sentiment around the domestic market in the life of this survey. So that's positive. Industry sentiment around international is even more positive, and you can see the shape of that curve is even more impressive. Obviously, the impacts of the global financial crisis are there to see, but there's a strong recovery, strong positive growth, and strong positive sentiment going on around what's happening in the international market. And a lot of that is because of Asia. This breaks down the international visitors to Australia by region. So you can see the top line is the red line is Asia. So Asia, the bulk of our visitors come from Asia. People, that might surprise some people. And you can see the growth, particularly in the recent few years, is particularly being out of Asia. There's some great growth numbers there, which we'll dive into now. So this looks at by individual source markets, and number 1 is New Zealand. It's easy to forget about Kiwi cousins across the ditch, but they are still number 1. This is people, this is visitors. Right? Number 2 is China. And then we have UK, and then USA, and then the other Asian markets have been coloured red. And you can see that we have a swag of Asian markets: Singapore, Japan, Malaysia, South Korea, Hong Kong. That's a big band. But then if we look at expenditure, we can see that not only is that wedge of other Asia actually increased share, but China dramatically increased share. So we're going from 11% of the international arrivals to 17% of total expenditure. So with the Chinese market, there's not only a lot of them, but they're spending a lot. So this is a great story for Australia. This chart's a little bit complex, so I'll just explain a little bit. This is looking at international visitors to Australia from key Asian markets. And there's three things to take from this chart. The first is the red line, which is China, which you can see starts on the left quite low and has enormous growth, particularly in the last 5 years. Phenomenal. The second is starting on the left. The top line at the left-hand top is Japan. So you can see the decline in Japan, which matches what's been going on with Japan's macroeconomic settings, a real doldrums economy, and we've certainly felt that in tourism. But then the band of other Asia at the bottom, you've got Singapore, Malaysia, South Korea, Hong Kong, India. But again, you look to the last 3 years in that chart and you're seeing that growth. You're seeing growth starting to come through. There's nothing like China, there's only one China. But there is a growth story out of other Asia. And of course, when you think about the size of some of those markets, like India and Indonesia, there's big potential to come from some of those markets as well. So let's go to China and start talking about China a little bit. And I'll give you some numbers. I haven't got these up on a slide. But 4.8 billion Australian dollars is total spend from China in 2013. That was a 16% increase from the previous year. That's forecast to go to between 7 and 9 billion by 2020. So there's good growth forecast in that number. Visitor arrivals from China currently sit, or at the end of 2013, sat at 709,000, which was up 14.5% from the previous year. Total visitor nights from China, 29.8 million. Again, that was up 7%. And dispersed nights, something people often ask is, do the Chinese travellers get out of the major cities? So 19% of total Chinese nights were dispersed. And that was around the same as 2012. So as the total market is growing, the dispersal rates is staying around the same at this stage. But it means a lot more people who are dispersing because the total size is growing. So Australia's eighth in terms of the destination, the outbound destination for Chinese travellers. So that's quite good. 45% of our Chinese visitors are repeat visitors. 71% of them are coming here for leisure. The biggest demographic is 45 to 59-year-olds, and they're spending about $7,200 on average when they get here. These numbers and some of these charts are from Tourism Australia. They do a lot of in-country research, and this is looking at consumer preferences. So ask them the question, what do you want from a visit to Australia? Or what do you want, sorry, from a visit? And world-class beauty is the top one, 57%. Safe and secure. Good food, wine, local cuisine is number 3. Friendly and open citizens, nature or cultural heritage or activities, and rich history and heritage. Right? So they're the top things. You can see the importance of world-class beauty and safety and security. So the good news is that for Chinese travellers to Australia, they're quite satisfied. So again, this chart looks at expectations versus satisfaction levels, and China and Indonesia are right up the top right-hand quadrant there. So they have high expectations when they come here, they're met. So that's great. I guess that's driving the repeat visitation number that I said there. One of the things where the expectation and satisfaction doesn't match is food and wine experience. So when Chinese people are asked about Australia, and this is actually not just limited to China, this is a phenomenon which is true across the international markets, and they're asked, well, do you think Australia has great food and wine? They go, well, not really. And the only exception to that is that people have been here. Visitors who have been here rank Australia right up there. So the China market ranks Australia number 3, just to France and Italy in terms of food and wine offerings. And in some other markets, they rank Australia at number 1. So this is behind a current marketing campaign you might have heard a bit of information on that called Restaurant Australia, where Tourism Australia is promoting the great fresh food that we've got in Australia, the great places you can experience that food and wine in, and the multiculturalism nature of our society and the influences that has on food and our wine offerings. So what does all this mean for infrastructure needs? There's a lot of growth here. A lot of that growth is targeted around China. We do expect that growth to continue. The government's forecast a compound 9% growth in the Chinese inbound market to 2020. So there's good growth expected there. In fact, the numbers we've had in the last 5 years you've seen have been a lot bigger than 9%. So what is it going to drive? What are the things we're going to need in Australia if we're going to meet this new market, or this growing market? So clearly there's going to be need for aviation infrastructure investment, not at the scale that China's putting in, but when you go around the major airports around Australia, we do see that investment going on. So in Brisbane, they've got approval and they're moving ahead with their investment in new runways up there. In Sydney, there is Badgerys Creek, which will come on stream, but also investment within Kingsford Smith Airport in terms of both the road access, but also the terminal reconfiguration. In Melbourne, they're looking at a new runway there again as well. Perth is looking at the same. So a significant amount of aviation investment, airport investment, convention exhibition facilities. This is David's soon to be new shed in Sydney. It's a fantastic international convention centre, Sydney, which is a demolition site at the moment, but that will be spectacular and a much needed addition to what Sydney and Australia have got to offer. Obviously hotels, we are seeing it's quite after many years of grumbling into our beards about a lack of hotel supply, we're actually seeing a pleasing amount of supply backed not by government incentives, but really backed by some fundamentals, and the fundamentals would suggest that that's going to continue a little bit. So that's been quite good. Integrated resorts are the new kid on the block for Australia. By that I mean casinos. And of course, we've seen recent announcements by the Queensland government with 4 casino licences in that state. We've seen the Barangaroo development, the packet development at Barangaroo get approval. So we're seeing more investment in that product, and obviously the rise of the Chinese market is an important part of that. We're also seeing major precincts being redeveloped which have a tourism component to it. So the image on the bottom left there is Elizabeth Quay in Perth, where there's hotels planned in there, but of course we've got Barangaroo as well in Sydney, and we've got Queen's Wharf in Brisbane, all with a significant visitor economy focus. Resorts, so we're seeing some pleasing reinvestment into resorts. This is one and only Hayman Island. Very significant investment going into that asset, but also Hamilton Island has also been investing, so it's nice to see some money go back in there. So these are some of the sectors we expect to see continued investment over the next decade or so, assuming these numbers continue to hold up. So we go to what are some of the public policy issues at play then. I think it's important to get a sense of how does Australia as a country maximise the opportunity that seems to be presented by both a rise of China, recovering traditional markets in North America and Europe, but also the advantages and experiences we've already got to offer. So within the Australian political system, there's all the states and territories, as well as the Commonwealth, have signed on to a target of doubling overnight visitor expenditure by 2020. So that would take the contribution to GDP to a band of between 115 billion to 140 billion. This is a report card that Tourism Research Australia published last year on where Australia's up to in terms of meeting those targets. And you can see the dot that where we are at the moment is just on the low end of meeting those targets. This is actually an improvement on where business as usual had been tracking when those targets and the strategy were developed. But the takeout from this is, even with the big growth in China, even with some pleasing recovery out of traditional markets, what we're doing isn't good enough yet. If that's really our target, then we've got to do something more to achieve those targets. And the significance of the lower limit to the upper limit, well, the difference between those is the whole contribution of the agricultural, fisheries, forestry sector. Right? So this is a whole industry sector of economic significance we can add in to the Australian balance sheet if we get this right. So from our perspective, the objectives are, or public policy objectives need to be that we grow demand, we keep growing demand for the right travellers to Australia. We've got the policy frameworks which help boost tourism investment. Then we're looking at the visitor experience, particularly if we're getting into high-end markets, then people expect high-end experiences, and that includes at our borders and when they're applying for visas, as well as what happens when they're staying in their accommodation, experiencing the attractions in Australia. We've got to look at our competitiveness. We know that when we're competing within this region, there's enormous cost advantages that Asia has over Australia. So how do we be cost competitive, knowing that we'll never have the labour rates that they have up in this part of the world? And we've got to expand the skilled workforce. So actually having people to do the jobs within tourism is a significant issue. So in terms of the reform agenda, so one is Tourism Australia funding. You can't do this job if you haven't got enough money going into it. So we spent about 144 million, or the Australian government on our behalf spent 144 million on Tourism Australia. The pleasing thing was that was untouched in the last budget. So in a time when pretty much everyone else got a big haircut and some got a lot worse than that, the Tourism Australia budget was left untouched. That was off the back of a Commission of Audit recommendation that actually halved. Right? So, but 144,000, if you take, a point we make to Joe Hockey is, if we go back to when he was Tourism Minister, and the money was about the same. So if we kept pace with inflation in terms of what we were putting into Tourism Australia, then there'd be an extra 30 million or so on top of that 140 odd million of funding. So there's a big argument to be made about putting more into our funding pool there. Visas and borders. So once upon a time, not so long ago, Australia was a leader in visa processing. Everyone else has gone sailing past us. James Packer made the point in the papers a few weeks ago, if you're a Chinese national applying for a visitor visa to Australia and you can't get the form in English, it's extremely complicated to get through. There's a lot of documentation required. And then when you get the visa, it's just a one-year visa. So once we make people jump through all these hoops, rather than encouraging them to come down to Australia once again, we make them go through that process all again. So there was a pre-election commitment from the coalition to expand the visas for China into 3 years rather than 1 year, and to do something about the processing times and the complexity, but that hasn't been delivered yet. So China is obviously only one market. It's a very big market and it's a growing market, but we need to be having the same sort of focus that we've got on China, which also all these other growth Asian markets. It's about having a welcoming approach to our visa processes. Also on borders, as we see more people accessing our airports, then we need to use technology better to give people a better experience as they're coming into Australia and also as they're leaving Australia. And there's good economic reasons for this as well. So happier people at airports on their way in or out, more likely to spend more, and that's good for our economy. Increase aviation access. So we've seen actually some very significant increases in aviation access to Australia, and that's been pleasing. And part of that has been around the focus of negotiating aviation agreements country to country to allow those flights to come in. But the eye's gone off the ball a little bit on that. So we need a greater focus on negotiating flight routes into particularly our growth markets, because some of those growth markets are maxed out. Plus, we need to look at some of the regulation around Sydney Airport to provide anti-congestion measures, so leaving the curfew in place, but some of the rules around how the movement cap operates, which are quite complex and I won't go into, need to be addressed as well. Passenger movement charge, so we have a tax, a $55 a head tax on every departure, which it doesn't impact someone if they're catching a first class flight to Sydney, but if you're doing a trans-Tasman flight or a flight from Darwin up to Indonesia or back, this starts becoming quite a significant component of the total ticket price. So there's no doubt that having this passenger movement charge, which is actually for short-haul destinations the most expensive in the world, is denying Australia some growth in the visitor economy. And the third thing is to address labour supply issues. So there is the 24/7 nature of tourism just doesn't work with the current penalty rates regime, and a lack of flexibility, particularly for regional tourism operators around the current workplace arrangements, mean that it can be difficult to manage a part-time workforce within regional Australia. And there's also the need to look at our working holiday maker visas and some of our other visa arrangements to make sure that the tourism industry is able to access a labour pool through some of those visa classes as well. So that's a high-level snapshot of some of the reform agenda that TTF's pursuing, which brings me to the end of my presentation. Very happy to go into any of those issues in discussion. Just in closing, I'd like to say that I hope what I've been able to do is shine a bit of a light on some of the dynamics behind the tourism sector, the growth that China's driving. Certainly when you look at what's going on there, it's a nice time in Australian tourism. You've got a domestic market which is recovering and quite well, and recovering quite well with the dollar still relatively high. We've got traditional markets which have been coming back, particularly over the last 12 months. Great numbers out of the UK, great numbers out of the US. And then this rise of China leading an Asian pack with looking to the future, a high likelihood that that's